A very good evening to you all, and welcome to the 10th episode of Market Replay. If you are tuning in for the first time, I'm your host Koketso Ditlhakanyane, founder and chief technical analyst at Ace Forex Academy. Just to give you a brief understanding of what I seek to achieve through these videos, and that is to just give some insight and overview over the different trading opportunities that were provided to us by a particular currency pair, right? And how I do that is that I will be reviewing a day's worth of price data in the form of candlesticks that relate to a certain currency pair, and I will be highlighting the different trading opportunities that were presented and how we could have taken those strategies using the Ace Forex Academy specific candlestick momentum pullback trading strategy. And for today's episode, we will be looking at the pound against the United States dollar. We'll be reviewing market data from the 24th of July, which was this past Friday. Right, let's get into it. Starting off, what we want to do is mark out our trend. So the day started off bullish, right? But that didn't last too long. The bears pushing the price to the downside. They didn't last. Then the bulls came back in and maintained the uptrend. We had a very long period of consolidation that lasted for far beyond half of the day, right? So this Friday was this past Friday was very flat for this particular pair because we had this pretty long period of consolidation, right? But as we know and as we've learned from previous videos, that areas of consolidation give us a chance to enter the market, right? You don't want to enter while you're in a rally or while the market is in a fall, right? You want the market to take a bit of a pause, readjust itself, regain momentum, okay, take on new sellers and buyers, and then continue in the desired direction, right? So this was a very good opportunity presented to us, but we will be revisiting that. Okay, price then continued to push to the upside with the formation of higher highs and higher lows. Okay, and that's how our day closed off, with another region of consolidation, and we'll just mark that out. Okay, there we go. All right, as promised, let us review these areas of consolidation. So we'll begin with this first area that we have over here, right? Okay, move on to a lower time frame. Now this is what I always preach to my students, right? What we want to do is start on your left hand side and then move on to your right hand side, right? What starting on your left allows you to do is it allows you to forecast a possibility, right, happening into the future, right? Because we're understanding our history. So with the formation of a swing high over here, what we know is that price turned around. So in future we may expect price to turn around. If it's not strong enough, or if it's strong enough, it will then break through and continue to the upside, right? And with that understanding, what we then see, we had a classic case of a fake out in this region. Okay, now with the formation of a fake out in this particular region here of the market, we can then pull out our modified Fibonacci tool, okay, and forecast the possible take profit zones that we might have had. Okay, now with a very conservative stop loss, what we can then notice from this particular move is that our minimum risk reward ratio that we strive to have is 1:1, and that sits well below our resistance level, right? As well as the 1:2. All right, so taking this trade with a very conservative stop loss, we walked away with a good trade that far exceeded 1:2, right? As you can see, price continued and pushed through our resistance zone, and our 1:1 profit target and the 1:2 profit target sits well below our resistance zone, and those were just smashed through on this past Friday, right? And we made good returns on this particular trade, right? Some of you may also question this region over here. Yes, this was also a good position to take a fake out, right? And using the modified Fibonacci tool, what we can then see from this particular fake out trade is that the minimum of 1:1, right, was attained by taking this particular position. So like I say, and as you can see, we had a very long consolidation period, but consolidation to us just means that the market is giving us a chance to join the steam of the market, right, with the momentum that's carrying the trend of the market. And in this case, it was to the upside. And what we can then see is that the first opportunity gave us a good 1:1 return, and the second opportunity far exceeded that, with price breaking through our resistance zone. And that's how we would have taken this, or you would have taken this particular trading opportunity while using the Ace Forex Academy specific momentum pullback strategy, right? We can then move on to the next one. Okay, let me just remove it. And this is our next zone, right? And let's move on to a lower time frame. Okay, right, like I always say, we always want to start on our left, right, and then move on to the right hand side. Okay, so starting on our left, we have the formation of a swing high, and a swing high gives you your area of resistance, which also represents your area of supply, right? So what we know is that we have buyers parked in this particular region, right? Let's pull out our modified Fibonacci tool and forecast this entire move. Now, our strategy, as part of the rules, we have a rule that says we only consider pullbacks that exceed the 50% level, right, in order for us to be interested in taking the particular trade that is presented to us. And in this case, we did not have a close over the 50% level, so we would have not taken this particular setup, right? We would have just looked past it because it doesn't meet our trading rules. And well, looking at the further scope of the market, I mean, that's not a train smash, because we had scored 2 good trades from this particular consolidation region, and to just miss one, I mean, that's nothing to cry over, right? It happens, and that's the market. Even though the retracement wasn't deep enough, price still then exceeded to the upside. Okay, and ladies and gentlemen, that's your view of the pound against the United States dollar on Friday the 24th. This is how the pound performed. We see that the pound had lots of buyers stacked behind it. As the dollar got weaker, the pound got stronger, and we were presented with 3 trading opportunities, with 2 only being successful to take. And that's how we would have simply done it, right? So if you enjoyed this episode and you found it insightful and it added value to the way you trade and the way you see the markets, please do like the video. And if you'd like me to review a certain currency pair or index in the next episode, please do leave your suggestion in the comment section of the video. If you have subscribed, please do hit the bell notification icon so that you are alerted the next time I upload a new episode. And if you haven't subscribed, please do make sure to subscribe, and then further on to move on to hitting the bell notification icon as well. Ladies and gentlemen, thank you for joining me in this episode, the 10th episode of Market Replay. I'll see you in the next one. Cheers.